Walgreens are on the move following the company's latest earnings results. Now, Walgreens missed the mark for 2 straight quarters, losses significantly lower over COVID-19 vaccines and also testing volumes. The last time the company posted a consecutive earnings miss was nearly a decade ago. Walgreens looking to regain some footing with his leadership shakeup. Veteran healthcare executive Tim Wentworth will take the helm beginning October 23rd, nearly 2 months after Roz Brewer stepped down from the position. And we want to bring in Brian Tanquilut. He's Jefferies healthcare services analyst. Brian, it's great to see you here. So just taking a look at these numbers that we're getting here from Walgreens, adjusted EPS forecast missing the street's expectations. Also, its adjusted profit for the most recent quarter coming up a bit short, yet we're seeing the stock in positive territory. What's going on here?
Hey, Shauna, good morning, and thanks for having me. So yeah, just to answer your question, I think what you're seeing here is that management announced this morning that they're looking at $1 billion cost reduction effort that they're implementing here in the next few months. And then they're also reducing their CapEx budget for 2024. And as you said, Tim Wentworth, a very seasoned healthcare executive, is expected to join the company in a few weeks here. So I think there's a little bit of excitement around that. But really, I think it's the fact that they are doing the right moves to drive cost savings and improve profitability in some of their underperforming segments, specifically the Walgreens Health business that they saw $300 million of losses in fiscal 23.
Does that cost discipline, as they put it in their presentation, does that equate to structural changes that we should expect to come forward at Walgreens?
Hey, Brad. Yeah, I think a lot of that will come from, first, it's headcount reduction at the head office level. I think that's one thing they're looking at. They're looking at some structural changes, such as reducing store hours, especially in markets where it doesn't make sense to be open, whether it's 24-hour stores or stores that are open past 9 o'clock, right? And I think you're going to see some situations where the pharmacy side of the business or of the store will be open fewer hours to make it more profitable. So you're going to see some changes like that being rolled out here over the next few months.
Brian, what do you think the top priority should be or needs to be for Tim Wentworth when he takes the helm?
So I think the thing that's changing with Walgreens is that they're making a big push into healthcare, right? So I think Tim, being the healthcare executive that he is, very seasoned, will have to look at putting all these assets that they've bought over the last few years that are healthcare related and coming up with a good synergistic offering that actually generates profitability. So for example, VillageMD and CityMD, which they bought last year, as a business has been losing a lot of money. So I think that turning that segment around is important, but also I think having a solid healthcare strategy going forward is important for Walgreens to be viable as a company. When you look at CVS with their Aetna business and their PBM, I think Walgreens feels the need to have a similar, healthcare focused strategy. And I think Tim will have his hands full trying to put all these things together.
When you think about the different kind of services that those pharmacies within Walgreens provide, and for where Walgreens and CVS and some of the other largest PBM players have been able to maintain market share, it's a kind of market share guarantee when you're the company that's working with some of these larger entities that have the IP, that have the patents, but some of those patents are starting to roll off. So how does a patent roll off also impact a company like a Walgreens?
That's a good question, Brad. So as we think about the drug world, right, I mean, today, roughly 90% of all prescriptions filled are generic already. Now, the remaining 10%, though, a lot of those are biologics or what we call specialty drugs, and they still represent about 50% of overall drug spend. And I think that's one area where Walgreens does not have a good presence or as significant of a presence as, say, United Health and Optum or CVS with their Caremark specialty pharmacy business. So I think it's an area where we're seeing a lot of growth that Walgreens needs to have a footprint in at some point. But also, to your question about the PBM, I think some of the challenges we've seen over the last few years is that the PBMs have been putting pressure on pricing for these retail pharmacies, where the view has become that retail pharmacy is a commodity at this point, right? So I think having the healthcare assets behind them and having some of the clinics inside the pharmacy locations will give Walgreens hopefully some leverage to push back down the road against some of these gross margin and pricing pressures from the PBMs.
What type of risk factor do you assess to just the convenience factor of a Pillpack even, or some of the other delivery services that have emerged where PBMs would typically rely on people to come get their prescriptions filled and come in person?
Yeah, it's a good question. So if you think about, Pillpack has been around, obviously Amazon bought them a few years back. Mark Cuban's discount plus strategy is out there as well. So there are a lot of these emerging disruptors in the pharmacy space. Now, what we're seeing though is that as most of the patients, right, that are using a lot of drugs, and we think about the demographic changes with the senior population growing, seniors love to go to their pharmacy. I mean, they love the relationship or the in-person interaction with the pharmacist. So that's actually hard to disrupt. So while there are models out there that are aimed at reducing costs, I think that the pharmacy exists for a reason, and that a lot of consumers would want to keep that relationship. And pharmacists are very trusted healthcare practitioners in the market, probably more so than physicians in some cases. So I think that the pharmacy business will survive. I think the pharmacy business will need to exist, and consumers will want to continue going there. It's just a matter of finding the right model where the pricing is right, the margins are sustainable, and returns to investors are adequate.
Brian Tanquilut, who is the Jefferies Healthcare Services Analyst. Brian, thanks so much for taking the time here this morning.
Thank you, Brad. Thanks, Shana.